Time agnostic trading. The goal is to satisfy the parent VWAP order at a better price than the end of period VWAP benchmark. The arrival price of the parent order is the only concern. VWAP traders are agnostic as to what time the parent order is satisfied, as long as it is better than the final VWAP. Positions established early in the trading period carry more time risk of not beating the VWAP, as the price of the final VWAP is highly uncertain during the early trading period. Conversely, positions established late in the trading period carry less time risk, as the price of the final VWAP becomes more certain. The parent VWAP order must be satisfied at a better price than the end of period VWAP benchmark. Here we see the end of period VWAP benchmark. We reverse engineer what's called the alpha line. We draw the conclusion that for VWAP buy orders, the arrival price must be below the alpha line. Conversely, for VWAP sell orders, the arrival price must be above the alpha line. This reverse engineer is academic in nature, but it really serves to solidify the importance of the alpha line and the final VWAP benchmark. The arrival price of the parent order is the only concern. Using the same data set, we see the final VWAP benchmark, and we reverse engineer the alpha line. Using the alpha line, we want to focus on the arrival price relative to the final VWAP benchmark. Throughout the trading day, we'll take a look at different arrival prices. In this first example, the arrival price of $29.93 is below the final VWAP. Moving forward through time, through midday, we see the arrival price of $30.05. This comes in above the final VWAP. At midday, we see the arrival price of $29.96 comes in below the final VWAP. Late in the trading period, we see the arrival price of $30.13 is above the final VWAP. Finally, on the close, we see the arrival price of $29.88, which is also below the final VWAP. This academic example serves as a foundation for our understanding of the importance of the parent order arrival price relative to the final VWAP, as well as the final VWAP forecast. VWAP traders are agnostic as to what time the parent VWAP order is satisfied, as long as it's satisfied better than the final VWAP. In this example, using the same data set as before, we present two general ideas: convergence towards the VWAP and crossover between the market price and the VWAP. In this example, we see the market price crossing over the VWAP on 5 separate occasions throughout the trading day. We want to focus on when the market price converges towards the VWAP relative to the final VWAP benchmark. We use the alpha line and further reverse engineer what we call the alpha VWAP forecast. We use the alpha VWAP forecast as a reference point for the final VWAP benchmark. We apply our execution schedule relative to the final VWAP benchmark, keeping in mind the concept of crossover and convergence between the market price and the VWAP. Risk as a function of time. We know that the VWAP is a moving target. At 9:30, positions established at or near the VWAP carry 6.5 hours of time risk. What this means is that with 6.5 hours left to trade, an adverse move in the VWAP could in turn have an adverse effect on our arrival price. Positions established at or near the VWAP at 12:30 carry only 3.5 hours of time risk. As the final VWAP becomes more certain, there's less movement in the VWAP later in the trading session. We want to establish positions at or near the VWAP later in the trading period that carry less time risk.